This trading setup wins almost 90% of its trades. We tested it 11,000 times across 5 years of data, and after real costs, it still lost more than $100,000. It is called the ICT Silver Bullet, the most searched setup in trading. A specific hour, a raid on liquidity, a gap left behind, an entry that is supposed to be almost free money. Its fans are right about the win rate. That is exactly the problem. Here is how a strategy that wins 9 times out of 10 still takes your account apart. If you have never seen it, here is the recipe, and we are going to test exactly this. The Silver Bullet lives in 3 one-hour windows in New York time: 3 in the morning, 10 in the morning, and 2 in the afternoon. The 10 a.m. window is the famous one. Inside the window, you wait for price to raid liquidity, meaning it pokes above a recent high or below a recent low, and then snaps back, trapping the traders who chased. Then comes displacement, a sharp move the other way that leaves a fair value gap, a 3-candle imbalance the textbooks say price wants to refill. You enter when price retraces into that gap. Your stop goes beyond the high or low that took the liquidity. Your target is the opposing pool of liquidity, the next obvious high or low. Clean, mechanical, testable. So we tested it. Here is the protocol, because without one, this is just another guru saying, "Trust me." We took 5 years of Nasdaq futures and over 4 years of S&P futures, real CME data, 1 minute and 5 minute. We coded the Silver Bullet 2 ways. The faithful version, with the raid, the rejection, the displacement, all of it. And a dumber control that just takes the first gap in the window so you can see whether the rules add anything. We tested all 3 windows and 3 targets: 1-to-1, 2-to-1, and the draw on liquidity. That is 72 combinations and 11,221 trades. We wrote the prediction down before we ran it. Every fill is conservative, every loss assumes you got the worst side, and real commissions and slippage come out of every single trade. Before the verdict, you call a few. Real setups from the deck: the 10 a.m. window, Nasdaq. Textbook raid, textbook gap, entry sitting in the imbalance. Win or lose. 3 seconds. Tag the liquidity for a tiny winner. Felt great. Next. Next. Same pattern, same window. Take it? Stopped at the high that took the liquidity. 1 full R gone, and it just erased about 15 of those tiny winners. Last one. It hit the target. It still lost money because the target was smaller than the commission. Keep that one in mind. It is the whole story. Here is everything on one screen. The faithful Silver Bullet, traded at 1-to-1, lost about 0.05 of an R per trade. At 2-to-1, the way most people target it, the same story, still red. At the draw on liquidity, it lost the most, more than 1/10 of an R a trade. Every version ICT actually teaches, negative. The naive control, also negative. All 6, red. On a single Nasdaq contract, the faithful version at 1-to-1 bled about $30 a trade, more than $100,000 over 5 years. And the famous 10 a.m. window? It is the middle of the 3. London lost less. The afternoon lost more. They are the same coin flip wearing different clocks. There is no edge in the hour. So how does a setup that wins almost 90% of the time lose money? This is the part nobody shows you. Take the liquidity target on the 10 a.m. Nasdaq. It hits its target 89.6% of the time. 89%. Put that on a thumbnail and you sell a course. But watch what happens after costs. The trades that actually made money, net of commission and slippage, 13%. The other 76% were wins on paper, erased by the fees. 9 little green ticks, and then 1 full stop that swallows all of them. The win rate is not the edge. The win rate is a dial you can set to anything by moving your target closer. A 90% win rate tells you exactly nothing about whether a strategy makes money. That is the lesson. Write it down. Now the part other channels cut. We did not stop at the headline. We looked at all 72 combinations, every market, every time frame, every window, every target. And exactly one of them made money. The dumb control on the S&P 5-minute at 2-to-1, plus 5/100ths of an R. Here's why we are not selling it to you. When you slice the data 72 ways, you expect about a dozen false winners by pure chance. We found one. That is fewer than chance. It is noise. It is not even the silver bullet. And if we built a video around it, we would be doing the exact thing this channel exists to call out. One green box in 72. We keep the caveat instead of hiding it. Let me be precise, because precision is the point. This does not prove ICT is worthless, and it does not prove price ignores those hours. What it proves is narrower and more useful. The clock is not the edge. Time of day, by itself, mechanically traded, did not beat costs in 5 years on two of the most liquid markets on Earth, in any window, at any target a silver bullet trader is taught to use. And a 90% win rate, the number the whole strategy is sold on, was a costume the entire time. If a setup only works when a human reads the context, then the context is the edge, and the hour on the clock is just where you happen to be looking. So here's the deal. The entire backtest, the code, and all 11,221 trades, every entry, every stop, every result, are free in the Discord. Run it yourself. Change the window, change the target, try to find an edge we missed. And if you do, post it, because we will test it on camera. The indicator that finds these setups is linked below. We test, you decide. And the next time someone shows you a 90% win rate without showing you the money, now you know exactly what they are hiding.